Among the shares of stocks traded at the Philippine Stock Exchange or PSE, those from International Container Terminal Services Incorporated or ICTSI is definitely one of the most resilient. Over the last 12 months, the price of ICTSI shares at the PSE has risen by nearly 90%, making it one of the best performers at the stock exchange. And it looks like ICTSI shares are unstoppable. For full year 2025, Razon-led ICTSI recorded a 23% increase in attributable net income, reaching $1.05 billion, due to higher cargo handling volumes across its port operations globally. Excluding the impact of non-recurring income and charges, new operations in Iloilo, Philippines, and the discontinued operations in Jakarta, Indonesia in 2024. And new operations in Batam, Indonesia in 2025, net income attributable to equity holders would have grown 26%, according to ICTSI. ICTSI reported revenue from port operations of $3.23 billion for 2025, an increase of 18% from the $2.74 billion reported in 2024. Enrique K. Razon Jr., ICTSI chairman and president, expressed optimism on the company's performance this year, and vowed to sustain operational efficiency and keep ICTSI's balance sheet healthy. The following are what Razon said about the company's performance in 2025, and the prospects for this year. Our focus on operational efficiency, targeted capital allocation, and prudent financial management supported continued margin expansion and strong cash generation. As we execute on strategic opportunities across our network and invest in new projects, we remain committed to maintaining the financial discipline and selective approach that have underpinned our track record of value creation. Looking ahead, we remain confident that we can capitalize on the opportunities across our markets. With a robust balance sheet, healthy pipeline of strategic expansions and deep bench of operational talent across our terminals, ICTSI is well positioned to continue executing our long-term strategy and create sustainable value for our shareholders. The capital expenditures or CAPEX of ICTSI, excluding capitalized borrowing costs, amounted to $650.44 million in 2025. The CAPEX for 2025 was mainly utilized for the ongoing expansions at Conticon Manzanillo SA in Mexico, Manila International Container Terminal or MICT, Manila North Harbor Port Incorporated or MNHPI, and Mindanao Container Terminal or MCT. Also, the project at South Luzon Container Terminal or SLCT in Batangas got funding for development. Investments were also made in ICTSI DR Congo SA or IDRC in Democratic Republic of Congo and ICTSI Rio in Brazil, and equipment acquisitions and upgrades at certain terminals. The upfront payment for Batu Ampere Container Terminal or BACT in Batam, Indonesia was also made last year. Excluding the upfront payment for the new project in BACT, organic CAPEX in 2025 would have amounted to $572.49 million. For this year, the group's estimated capital expenditures is $740 million to be utilized mainly for the completion of Phase 3B expansion at CMSA in Mexico, ongoing expansions at MICT, MNHPI, MCT, and SLCT in the Philippines, ICTSI Rio in Brazil, and IDRC in DR Congo. Also, other equipment acquisitions and upgrades, and maintenance CAPEX, plus 4 new expansion projects at Operadora Portuaria Centroamericana, SA de CV in Honduras, Victoria International Container Terminal Limited in Australia were made. Conticon Guayaquil SA or CGSA in Ecuador, and Phase 4 at CMSA in Mexico will also benefit from ICTSI's capital spending this year. The sustained capital expenditures by ICTSI in the ports it is developing and managing in the Philippines and other parts of the globe shows that the company is optimistic on future growth, which will be fueled by sustained global trade. What is remarkable about ICTSI shares listed at the PSE is they have sustained their climb in the past 3 years. Specifically, ICTSI shares have increased by nearly 300% in the past 3 years, as shown by this chart from the website of MarketWatch. In the last 12 months, the highest close of ICTSI shares was 738 pesos in February 2026, and the lowest close was 311 pesos in April 2025. And despite the drop of the PSE index after the start of the Middle East crisis, the price of ICTSI shares did not plunge and closed at 710 pesos per share on March 10. Hence, ICTSI shares are an attractive acquisition because the company is built on very good fundamentals, and its shares remain resilient at the PSE.